Out of over 5,000 companies listed on the stock exchanges of our country, if you want to invest in the largest 250 companies, well, you may consider investing in the large and mid-cap equity mutual funds category. Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of investing and personal finance. So continuing with our series of best mutual funds for 2025, in today's video we'll look at the 5 consistently top performing large and mid cap funds that you can consider to invest in. But first things first, let's start with understanding what large and mid cap funds are, where they invest, who should invest in them or who should stay away from them. As the name suggests, large and mid-cap funds invest in a combination of large and mid-cap companies of the country. They have to invest at least 35% of their assets each in large cap and mid-cap stocks. Now, large cap stocks means the top 100 companies by market capitalization. Market capitalization in simple terms means the size of the company. And the next 150 companies that rank from 101 to 250 in terms of their market capitalization are defined as the mid-cap companies. So, who should invest in them? You need to have an aggressive risk profile to invest in equity funds. But if you are not comfortable with pure mid-cap funds but don't want to go as conservative as large cap funds, this category may be a good choice. The mandatory 35% allocation to mid-caps can boost long-term returns, while large cap exposure reduces risk compared to pure mid-cap funds. Like most equity funds, a minimum 7-year time horizon is recommended for long-term goals. Now let's quickly understand how we selected the best large and mid-cap funds to invest in 2025. We tried to incorporate both the consistency of returns and volatility while taking out the best funds. So we started with the 7-year rolling returns of all the large and mid-cap funds in the last 10 years, that is from November 2014 to November 2024 period, rolled on a daily basis. There are 31 large and mid-cap schemes. Now, as we looked at the 7-year rolling returns, 11 funds which have not completed at least 7 years of existence were automatically filtered out. Now, for the beginners, rolling returns is like calculating trailing returns, assuming you are investing on a daily basis, or you can say it is like a daily SIP for a certain interval and then taking an average of the series of returns. So, as per the methodology used by us, if I say the 7-year rolling return for Fund A is 17.5%, it means that we took out the 7-year return for all the 7-year periods that existed in the 10-year time period between November 2014 and November 2024. So we got 2,465 instances of returns. Means there were 2,465 7-year periods between the 10-year time frame considered. Now the average of all the returns obtained for 2,465 instances is the 7-year rolling return of Fund A, which is 17.5%. So we filtered out the funds that had delivered higher than the category average returns. Next, to factor in the risk portion, we checked for the 7-year rolling standard deviation. Standard deviation measures how much a mutual fund's returns deviate from its average. For instance, if a mutual fund has a standard deviation of 3% and an average return of 10%, the fund's returns could be between 7% and 13%. So standard deviation measures volatility of the fund. Higher the standard deviation, the more volatile the fund would be. And just as we calculate rolling returns, we find out rolling standard deviation. So we took out the schemes that have a 7-year rolling standard deviation of lesser than the average 7-year rolling standard deviation of the category. This gave us the schemes that have been less volatile than other schemes in the category on an average. So we got 5 schemes that have delivered 7-year rolling returns higher than the category average while being less volatile than the category. We did not rank these funds. We are revealing the names as per their size. So let's start with the biggest fund. So the first one is SBI Large and Mid Cap Fund. That is also the second largest fund, managing massive assets worth over 29,000 crore in the large and mid cap category. This fund has delivered a 7-year rolling return of 15.02%. Now, to give you some idea on how much money this made for its investors, so 1 lakh rupees invested 5 years ago in this fund would have become huge, 2.82 lakh rupees. And a monthly SIP of 10,000 rupees for 10 years, where you would have invested 12 lakh, would have grown to a massive 32.6 lakh rupees. Now, if you want to invest in any of these schemes or any other schemes, you can do that on the ET Money app by paying 0% commission for absolutely free. In fact, you can evaluate any fund of your choice on the app using an amazing surprise tool. So do explore the ET Money app for mutual funds and other investment options. Okay, coming back. Managed by one of the best fund managers in the industry, Harsha Upadhyay, Kotak Opportunities Fund is the next in line. It holds huge assets worth 25,600 crore and is also the third largest fund in the category. It has given 7-year rolling returns to the tune of 14.54%. And if you had invested 1 lakh rupees in this fund 5 years ago, you would have close to tripled your money to 2.93 lakh by now. And a 10,000 rupees SIP started 10 years ago in this fund would have amazingly grown to 35.07 lakh. Next, with the 7-year rolling returns of 14.65%, we have DSP Equity Opportunities Fund, which manages assets worth 14,023 crore rupees. So if you had invested 1 lakh in DSP Equity Opportunities Fund 5 years ago, you would have made an impressive 2.81 lakh by now. And a monthly SIP of 10,000 rupees started 10 years ago, where you would have invested a total of 12 lakh till date, would have grown to 33.98 lakh rupees. Then we have Invesco India Large and Mid Cap Fund. It has given 7-year rolling returns of 14.27%. This fund holds assets worth 6,340 crore. 1 lakh rupees invested in this fund 5 years ago would have grown to 2.91 lakh rupees. Coming to the SIP investment. So a 10 years monthly SIP worth 10,000 would have more than tripled to 36.47 lakh by now. Then we have another fund, Quant Large and Mid Cap Fund, with assets worth 3,700 crore that has delivered a stunning performance with 7-year rolling returns of 16.18%. And if an investor had invested 1 lakh in this fund 5 years ago, the money would have grown to gigantic 3.41 lakh rupees. And a 10,000 rupees monthly SIP started 10 years ago would have given you a huge corpus worth 36.82 lakh. And it's a wrap. For best mutual funds in other categories, do explore special playlist on our channel, Best Mutual Funds for 2025. And we'll see you with another insightful video soon.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.